Crypto assets are taxable in the UK, US, Canada, in fact most parts of the world, period. So whether you have exchange tokens like Bitcoin, Ether, ERC20 tokens, BP20 tokens, or NFTs, it's all pretty much in scope. And whether you are using a centralized or decentralized exchange, peer-to-peer, a soft or hard wallet, again, it's all in scope. The good news is I'm going to give you 5 effective tips as to how you can slash your taxes legally. So stay tuned. Are there any cracks in the system that perhaps allow you to keep quiet and the tax agencies may not find out? In my opinion, perhaps there are, particularly with decentralized and peer-to-peer trades. But legally, this does not exonerate you as a tax resident to report your crypto truly and fairly. It's your legal obligation. Sorry to be the Grim Reaper. Tax evasion is illegal and considered where there is a deliberate attempt not to declare income and capital and pay taxes due. And this includes concealing information, as can in theory be done with crypto. Tax avoidance, on the other hand, allows you, the taxpayer, to organize your financial affairs as to legally mitigate your taxes. It is perfectly legal. So HMRC here in the UK has a data sharing program with all UK crypto exchanges. In fact, in their guidance Crypto 100300, they state HMRC can make information requests from exchanges under the powers conferred by Schedule 23 to the Finance Act 2011 or Schedule 36 to the Finance Act 2008. You can actually look that up here. They can obtain crypto transaction data from as far back as 2014. HMRC probably has the KYC, that is, know your customer information you provided when signing up for any UK exchange or wallet used by central exchanges such as Binance and KuCoin as an example. In effect, it's an identity check to find out where you live, who you are, so your trades can be verified to you, similar to stock market trading. HMRC is using this information to send nudge letters to crypto investors like yourselves, reminding them to report their crypto and pay their taxes. HMRC stated back in 2019 that they requested customer data crypto from exchanges that do business in the UK, so that includes Coinbase, eToro, and CEX, just as a few examples. But before you breathe a sigh of relief, just because HMRC haven't named the crypto exchange you use doesn't mean they haven't contacted them. HMRC is cracking down on crypto, so it's safe to assume HMRC will have contacted all the major crypto exchanges doing business here in the UK. What? And what's more, in 2020, Coinbase handed over data on UK customers who transacted more than £5,000 worth of cryptocurrency between 2017 and 19. Decentralized exchanges such as PancakeSwap or Uniswap do not require any KYC and are completely decentralized, often referred to as DeFi or decentralized finance, as there is no centralized body. So as a user, if you're engaging with DeFi through a private wallet where only you have access to the keys, then it's much harder to track down for HMRC, and you are required to personally make sure that you are filing your taxes properly in this instance. And remember, if there is a sudden or large deposit of fiat currency made into your bank account or any bank account in your name, chances are HMRC might start sniffing around. So what are your thoughts and experiences of declaring your crypto to date? I'd be interested in finding out whether you think certain types of crypto should or does not need to be declared, or perhaps if you are using a certain exchange, whether centralized or decentralized. Post in the comments below. And whilst you're at it, if you feel you're getting value from this video, please smash us a like, as it really does help us get our content out there. So as an investor or trader, how can you legally avoid taxes on your crypto? Well, here are some of my tips. Number 1, don't forget each individual, that is you as a UK tax resident, gets a capital gains tax allowance of £12,300 per annum. So perhaps dispose of your crypto tactically. You see, if you don't use it, you actually then lose it. And you'll be surprised how often this does actually happen. Number 2 is use any losses. Despite the surge in crypto valuations since 2020, you won't always experience a bull market. Bear markets will hit us too, and you could crystallize losses. Both crypto and other capital losses can be used to offset gains in the current year firstly, and then carried forward if need be to be used against future year gains. So for example, if in the 2022-23 tax year I realized £30,000 of crypto losses, I can actually bank these on my SA100 self-assessment form. Furthermore, then in 2023-24, if I realise £42,300 of actual gains, then I can actually use my losses of £30,000 from the last year, offset them against my 2023-24 gains, leaving me with £12,300 net gains, which then, under the current rules, gets covered by your capital gains tax annual allowance. No tax to pay. And don't forget to actually register or declare your losses. if you fail to do this, HMRC won't know any other way and they won't be acknowledged. Number 3, if you are married or in a civil partnership, then you could gift your crypto tax-free to your spouse or your partner and utilize their capital gains tax allowance. This will give you £24,600 of annual gains absolutely tax-free. Number 4, how about a bit of bed and spouse strategy? You what? This is where you sell some existing crypto at a loss and your spouse buys it back at a similar price, thus bypassing the bed and breakfasting rules. So now your spouse holds the same type and amount of crypto you had and you've nicely banked some losses which you can use to reduce your own personal tax bill. Pretty clever, no? And finally, perhaps consider becoming a non-UK tax resident to avoid paying UK taxes on your crypto gains and income. Now, the thing with just leaving the UK and becoming non-tax resident, you could end up jumping out of the frying pan into the fire. It all depends on where you are heading, your intent, and many more factors, which is why you need to watch this video to understand how becoming a non-UK tax resident actually works.